got Vandana in Singapore, and here in Dubai we have Andrei Laven. So welcome everybody. A morning in which Asian markets have opened a little bit softer after a big rally yesterday. Let's start with Andrei Laven here in the UAE, Chief Operating Officer at Sahara Energy Resources. Andy, really welcome your sort of big picture views on this OPEC plus impasse and ultimately its relatively muted impact on oil markets.
So I don't think the OPEC plus conversations are really to do with today. They're much longer term. So if you think about the macro scale of where we're going with decarbonisation, et cetera, over the next 10, 15 years, OPEC is going to be taking a much bigger share of the market. And as a consequence, people are jockeying for position in the recognition that some people, like the UAE, have made significant investments in the upstream to increase their production. And that's put them at a disconnect to a deal that they had to make early last year. So this is about the long term, it's not about the short term. And I think that's really why there hasn't been a significant impact, because I think everybody expects they'll come up with a compromise. It's just a question of what that compromise looks like in the short term.
Yeah, I suppose a part of the additional layer of surprise is the fact that they haven't done that yet. Vandana Hari, good morning, founder and CEO of Vanda Insights, sitting in Singapore. We had IEA report out yesterday, signaling fairly robust demand recovery in June, and yet these new barrels are not coming, at least not coming immediately from OPEC in August.
Yeah, good morning. So the IEA report indeed gave a fresh bullish impetus to crude prices. So when we began trading during the Asian day yesterday, it wasn't looking that of an upward momentum, but suddenly it took off, which was pretty much in reaction to the IEA saying that, first of all, the few things that stood out in that report for the oil market participants were that the IEA was almost raising a red flag that inventories have dropped even lower after having dropped below the 2015 to 19 average, and then saying that in the next few months, the global oil markets could become more tight, if anything, as demand continues to climb. And if OPEC stalemate continues and the 400,000 barrels per day does not come back into the market, at least for August. And I think that's what the market has baked in for now. So we saw, of course, a bit of a seesaw in sentiment. We saw Brent slump to $73 middle of last week. But you see, it's found a support level around 75, 76 cents. So I think, in my view, the underlying bullish narrative in the market, inventories are tight, demand is going to climb in the second half, is very much intact. I think to some extent the market expects the EIA data later today. Of course, it'll be looking for US demand, US inventory picture. To some extent, I think that is also all baked in. I think it would be a surprise to see anything but continuing climb in US consumption and continuing drop in US inventory. So that market is very tight. So overall, to my mind, the bullish narrative is very much intact.
Let's bring in a view from Eastern Europe and Estonia. Andrei Belyi, professor, founder, and CEO of Balesene. Andrei, where do you think Russia stands at this point in time in terms of the OPEC plus impasse? Are they want more oil? There's been reports that they might actually even mediate between Saudi Arabia and the UAE.
Indeed, it's an interesting situation, as we have used to see tensions between Saudi Arabia on one hand and Russia on another. Now we rather see tensions between the two neighboring countries, UAE and Saudi Arabia, and Russia is more portraying itself as a mediator. From the signals that we actually have, there is a willingness that the agreement is there. Nobody wants to repeat a new price war as it was in March 2020. Definitely Russia would be closer to Saudi Arabia's position nowadays. However, we have not seen either a very rash very rough decline in Russian oil output in recent months either. I would agree very much that the trend is rather bullish, and not only because that the market's getting tight, and that's quite interesting that actually we hear from the IEA two contradictory messages. One saying, be careful guys, OPEC plus might collapse the prices again, and another actually look, the market's getting tighter and OPEC plus needs to produce more. And these two signals basically signify or like illustrate to what extent the markets are unpredictable, but overall the trend is bullish. And once again, one of the important aspects is the geopolitical one. Yeah, so geopolitical tensions are increasing, and now I would watch out what happens in Afghanistan and what are the geopolitical implications for the great powers, since the United States is rather on the withdrawal mood. And that's a very important tipping point, because it's the first time since the end of the Cold War when the United States are signaling that they are ready to withdraw without having terminated the job. Then obviously there is a kind of like carte blanche for Russia, Turkey, and China to act there, and that definitely increases.
Well, the next world superpower that wants to sort of try their mettle in the sort of swamp of Afghanistan. It'd be interesting to see if China does indeed try and fill that void. But Andy, coming back to the basics, whereas as outlined there by Vandana, we are seeing all these very bullish signals continue. I mean, yesterday the API inventories continuing a big draw. We expect the EIA to confirm that today. Shale oil continues to be relatively restricted, and yet the oil price on the back of all of these factors, including most significantly perhaps the uncertainty about new oil supply from OPEC, is remaining quite sort of leveled in that mid-70s space. What's your explanation as to why we're not seeing that price jump higher?
Because of the confusing signals. I think there are, the trouble is what's happened is we've started to come out of the kind of economic crisis of the pandemic, is you've got very, very different paces of returning to some kind of normality across the world. And if you look at the draws, that's the US, okay? So it's important, but it's the US, it's not the globe. And I think if you look at the US, if you look at Europe, you see very different approaches. That's going to feed into very different responses in terms of demand. It's very clear that if OPEC Plus wanted to, they could push a whole bunch more product out onto the market. So which way should price go? Actually, market is waiting. The market, I think, in general terms, the market is okay with the price being where it is. It's much better being up here than it is much, much lower, because it allows various businesses to make money. I'm sure people in the shale business in the US are looking very, very closely at it, saying, so when do we go, guys? When do we go? Because at this number, they can make money. So I think there's too many conflicting signals for really the market to pick a direction. We've just kind of slowly bubbled up to the surface, and now we're waiting to see what the weather turns.
Ultimately, Vandana, in either case, we're still at the elevated price of 75, 76, or in the mid-70s on Brent, which, given where we've direction of travel over the last number of months, is a 50, 60% increase year to date. It's a very big number when you consider the fragile recovery of economies in all over the world, and particularly in Asia. I'm wondering, what's the outlook for demand destruction, particularly in the critical Asian market, at these prices continuing through the second half of the year?
Yeah, that's a very interesting and important point to ponder, and I would sort of build on what Andy was just saying with regard to demand as well. Is that look, the Delta variant, and I was looking through the IEA's report, I said, okay, the IEA is sounding so bullish. It's talking about bounding demand in the second half of the year. Because I was wanting to see whether IEA and then OPEC report, which will be out tomorrow, whether they're going to downgrade demand growth in light of this Delta variant, which has clearly emerged as a downside risk, right? And the IEA did. It's made a token reference to that there's a downside risk, but and so I was trying.
They're still forecasting the IEA, 4.6 million barrel a day demand second half. So it's a big number.
Exactly, absolutely. And quite an eye-popping month-on-month demand jump in June versus May. They said something like 3.2 million barrels per day. But let's continue to look ahead. And I was trying to unpick this demand scenario. So what's happening is, the way I would describe it, and continuing what I said earlier, that the narrative overall is still bullish on demand, and we can talk about supply separately, is because the COVID, the Delta variant, yes, it is causing a resurgence. Yes, it has caused some pretty bad, the worst waves of COVID so far in some countries. So we saw that happen in India, and right now, almost all of Southeast Asia is going through it as well. The situation is pretty bad in Indonesia and Malaysia, where they have had to bring in even draconian lockdowns. But that is a small part of the picture. By and large, we see COVID, Delta variant related spikes happening in pockets of the US. We see it happening across Europe. But then again, the story is that none of these countries, it is causing a pause maybe in the reopening in Europe. It's certainly not causing any pause or reversals in the US. So what it boils down to is that in response to the latest resurgence, the countries are, of course, using everything in their toolbox to quickly identify and contain those outbreaks. But they're also saying, let us step up vaccination. And if anything, the message that you see from governments is, we don't want to reverse. We don't want to go back into lockdown mode. People, just get yourself vaccinated. So all the countries that do have access to vaccinations are actually using that to step up vaccinations. And I don't see, aside from Southeast Asia, I don't see any country in a major reversal mode. Let's reverse the reopening. So that's why the bullish narrative remains very much intact. And just very quickly, I was also picking out some numbers this morning, because one can get swayed by headlines on Delta variant. And the media tends to make a lot of that. So very quickly, here's the big picture. I think this is very important for people looking at the oil market. So the all-time peak of the pandemic in terms of global cases was just over 800,000, which was reached in April of this year. Okay, where are global cases standing today? Is just over 400,000. Now, we don't have, unfortunately, any data on hospitalizations. But again, it's important to remember, and that's what the bulls are looking at, is that the variant is more contagious, but nobody has conclusively proven that it's more deadly. Okay, so we don't have any data on hospitalizations, but we do have data on fatalities. And so I was looking at the data on fatalities. So the all-time high of the pandemic in terms of global fatalities was about 15,000 people dying every day, which was in January this year. Where is the number now? Today, it's below 8,000. And despite this increasing talk of Delta variant and outbreaks, that's a plateau. It's been at around 8,000 every day. So,
I suppose I would just sort of take some caveat in the middle of that and say, what happened in India is a number in which I don't think anybody has really been able to quantify. And I would suspect if we had a real clarity on India's experience in the second quarter, it might distort those numbers. But generally speaking, I take your point on the reported numbers, it's clearly a downward trend. Let's just go back to Andrei in Eastern Europe and Estonia and sort of sitting on the doorstep between Russia and the European Union in terms of Germany and the change of leadership there coming in September. You talked about geopolitics in your earlier comment. Where is this relationship going, do you think? And are there going to be any sort of vibrations there to keep an eye on? We've got the Americans looking at possibly retaliating against recent ransomware attacks. Where is that whole picture now looking, do you think?
Well, it's very difficult to predict what's going to be in Germany, but of course, it's one of the most important elections ahead. What we actually observe is that a large part of the German business leadership is trying to find out how to reconcile with Russia and how to do business with Russia, considering the Nord Stream 2, considering also how French have been successful in getting good deals with Novatek, well, the major agreements between Total, the French Total Energy now, right? It's not Total anymore, Total Energy and Novatek. To get shares in transshipment terminals, and they got it all amid sanctions. So they got very good conditions, and the German businesses would like to have that too. So we have both in Paris and in Berlin a mood of warming up or relaunching relations with Russia, and
the Nord Stream 2 is in the middle of that also.
Of course, that's what I mentioned at the beginning, but of course, this view is not shared by other EU member states, particularly in Eastern Europe, Poland and the Baltic states, also Czech Republic. So that creates a certain tension within the European Union. Whether the election is going to change that factor or not, well, let's say like this: either the current coalition persists, then nothing going to change. If Greens get a good result and the conservatives, the Merkel party, gets Greens on board as a junior member, as a junior partner in a coalition, that's going to be very bad for Greens, and that's going to be something like nothing going to change. Just instead of saying that we need to do business with Russia, they will say that we need to have a cooperation on climate with Russia, on methane emissions abatement, on promoting hydrogen, on promoting blue hydrogen, and stuff like that. And Russian establishment have been very active recently in prioritizing environmental projects, in prioritizing offsetting, and that definitely plays on the hand towards this approach. However, much depends as well on how Russia would behave in the next month, and probably even German efforts will be in vain in case if, let's say, some political developments around Russia and its neighbors will not allow either Berlin or Paris to resume the relationship with Russia.
Andy, one of the sort of, coming back to the sort of market structure, the why are we not moving higher at this time if OPEC is looking fragile? Ultimately, it would have, one of the reasons might be that even if OPEC Plus was to suffer a situation for a while, an impasse, very few of them can actually increase production at this time. There might be 6 million barrels a day of idle capacity, but it sits essentially in only 2 or 3 countries, 4 countries, maybe Saudi Arabia, UAE, Kuwait, and Russia. How does that affect the dynamic, do you think, in resolving this crisis?
I think the time period is a little bit of a distraction, because essentially the market is going to react in the short term over long-term outlooks. So the challenge we have is, as you say, people can't just turn it back on again, but everybody's looking to the future in terms of direction. Okay, so realistically, what we've got is we've got a market which, in my view, is actually overpriced from where we are in terms of the actual demand, and it is because we're all wanting normality to come back, and therefore the desire, the momentum is to go up. OPEC have got a very different challenge, because they're trying to look at what really does the world need, not just today, but in the future. And how do we then play into that, taking into mind the geopolitics that sits between the OPEC Plus members? So
do you think there's a market sort of appetite or requirement, if you like, for that answer now, that sort of quota? What will be the sort of the outlook, the quota base beyond April? Is there a sense, oh, we need that answer now?
In my personal opinion, no, because they'll fudge it, right? It will be fudged. There's not going to be a massive fallout between the Saudis and the UAE. It'll get fudged. and they will do what they need to do to protect the prices, protect their market share, protect their revenues, and it'll all work out. The challenge, I think, for the market is we've moved into a different conversation inside of OPEC Plus. It's not now just about supply and demand. It's about the future supply and demand. It's about how much of the oil industry becomes national oil company dominated, with all of the smaller companies and the larger companies kind of stepping back from oil and gas. And then what happens? Do you get lots of little players saying, well, actually, if the BPs and the Shells and the Totals aren't going to invest, I'm going to invest. So
I am investing, but
it's a very different conversation.
Yeah, I mean, that's sort of the Achilles heel in a way, the fact that UAE in this instance has invested billions to get to that 4 million barrel a day figure they printed last April. And I think somewhere there's a crux. Let's get the room to have a chance to join our conversation a little bit with a survey question about the impact of prices that I put to Vandana a little bit earlier. If OPEC plus doesn't agree to raise supply soon, high oil prices will likely lead to demand destruction in cost-sensitive emerging markets, especially India. Do you agree or disagree with this, that this is not a free lunch? History tells us that when prices get this high, demand destruction does come, and consequently, the merry-go-round goes around all over again. Vandana, the reports out of Asia this morning, as we said, oil prices down a little bit. As media companies try and put some sense to that, they're saying, oh, well, the China number for the first half of the year with imports down 3%. Is a signal as to why there's softening in the market today. Of course, these are all sort of temporary moments, but nonetheless, the China decline in the first half was notable. Its outlook for the second half, if it was to continue, could also be a dampening factor to make things a bit more complicated for OPEC. What's your thoughts on where China goes in the second half of the year?
Yeah, I think this is a classic example of how you interpret and weigh data, in what context you view data, and especially this has become very, very critical when you're doing year-on-year or even first half comparisons, month-on-month comparisons in this entire COVID environment since last year. Now, personally, I'm not terribly surprised that Chinese crude imports were down year-on-year for the first half. If you recall, the first half of last year, the teapots, especially the independents who've now emerged for the past several years since they started getting independent import quotas and licenses, have emerged as the main driver of Chinese crude import demand growth. And if you recall last year, they all just jumped in like there was no tomorrow when prices crashed in March and April. And in fact, they were even buying beyond what their quotas allowed. And then, of course, the rest is history. As we know, there was a lot of congestion at ports and whatnot. So, that they have slowed down a little bit compared with the first half of last year is not entirely surprising to me. I wouldn't necessarily put too much into it. But in general, what you alluded to, I think that theme that Chinese growth is decelerating, and we've been talking about this on your show for the past few months. I think that is very much now a part of the market narrative. The market knows that is happening, that China started coming out of COVID and going back to normalcy pretty much in the second half, at least in the last quarter of last year. And then from there on, it's that the growth is not going to be like, kind of at the same incline going up.
That's in a way a big question for the second half, isn't it? What's baked in this price already? What Chinese demand is baked in this price already? The sort of demand recovery, the 4.5 million that the IEA expects in the second half. If that doesn't come, is that already baked in the cake that it is coming? I mean, these big pieces.
Yeah, the 4.5, I would think, is more looking at the West, the US reopening and Europe following in its footsteps. I think as far as China is concerned, the way I look at markets is like, steady as she goes. We're going to see a moderate growth. Let's say year on year, I would still think Chinese crude demand could grow, import demand especially, maybe 1%, 2%, which is actually basically settling into the pre-COVID normal. So that's not surprising. Just on the point of Chinese crude imports as well, as we were discussing again a few weeks ago, the second half import quotas for the independents came in much lower than what the government had given for the previous corresponding part of 2020. So all in, yes, don't expect double-digit growth in Chinese crude imports, but I think what the IEA is looking at is the Western Hemisphere taking off now.
Andrei, on that point, the outlook for Europe has been, it sort of continuously swings in this mixed bag of sometimes looking quite positive for the summer, the second half of the year. Let's say, looking at the travel tourism season, countries now due to open up next week, the UK on July 19th and others. Where do you see the European summer season, the aviation demand outlook?
Well, still the situation is pretty difficult, and yes, it's better than last year, but it's way to be the situation pre-2020. And the outlooks are unclear as well. One of the reasons is that, tourism will not pick up easily, and the overall economic situation remains unclear. So a lot of SMEs suffered during this period, and what is actually very important, more in the mid and long term, is that today the European Commission will come up with a recovery package and with a green package, and that basically implies that the European Bank, the European Central Bank, and also the member states will have to redesign, let's say, the future recovery packages, and that will be a costly affair. Already now, because of the emission trading scheme, the European electricity prices skyrocketed this summer. So it's quite paradoxical situation. So on one hand, the economic growth does not pick up, but the energy prices are increasing. And the main debate now in Brussels is whether to include or not into the emission trading scheme the building, means heating, and transport sectors. That's basically a very tough discussion now, because if they decide to include it, I mean, the costs of energy costs for businesses and for citizens will be higher, and we should not forget that the discrepancies, the disparities between the salaries, so we'll say between the level of life, is quite big. Therefore, the energy costs are not bared evenly. And
it'll be certainly interesting to see when they actually start to spend that money and the rubber meets the road. Let's get the survey result on and give Andy the last word. Demand destruction, agree, sort of 2-1 there. View on that. Andy, closing thoughts. This U.S. government seems to be getting closer to, although slowly, to this infamous infrastructure package, a new budget, U.S. inflation hitting a 13-year record level. Your thoughts on where the U.S. outlook goes? Could it be enough, even with a softer Asia, to sort of keep these markets elevated through the second half? Sorry, Andy, did I lose you?
No,
you're on mute, Andy.
Sorry. I totally agree with what Vandana was saying. The prices are really focused on the Western Hemisphere coming back. And I think it's another factor that you need to take into account when you look at vaccines. That's why they're coming back, because they have this inherent belief that they can vaccinate their way out of the crisis, and it seems to be working. But it is going to increase this this gap between those who have vaccines and those that don't. So the challenge is it's going to be very dominated by the Western Hemisphere, but realistically, the globe can't take off until we get back to being a global economy. And that's going to be the biggest challenge is great. So the US and the UK and Europe starts working, but what about everybody else?
Well, I think also in that that differentiator is not only the vaccine your way into recovery, but also you can continue to stimulate your economy and spend large amounts of money of what the Americans are doing and what Andrei just described for Europe. When that gravy train stops and millions of people lose that sort of financial support, I think that's a big picture in the second half of the year that we still don't have a full view on, but it is coming. Anyway, we need to wrap it up there. Markets have opened in Asia a little bit softer after a robust jump yesterday of 2%. We have an interview this morning with Tony Quinn, CEO of Tank Bank in Asia and Singapore, and the outlook for storage. You don't make money chasing contango in the storage market, says Tony. You got to be always in the money by having a much more holistic view. But there's an interview for catching up this week on Halftime Talk. And just a reminder that next week, of course, is the Eid al-Adha holidays, where most or all of the Middle East really is shut down. So we will just give you a heads up that we will be following suit on that. But thank you, Vandana. Thank you, Andy. Thank you, Andrei, for joining us this morning. Have a great day, and we'll catch up with you over the coming days. All the best. Thank you.
Thank you.
Thank you.
Yeah.